Hello and welcome to another edition of Invest Africa. Now, according to tax and advisory firm KPMG, Africa is home to approximately 1 billion people. For businesses and entrepreneurs looking for growth opportunities, Africa represents a compelling marketing case. Now, marketing multinationals on the continent can be tricky as African consumers are looking for locally relevant brands that they can connect with. Pelani Nyalunga filed this report.
According to the World Bank, by 2030, Africa's 18 largest cities will have a spending power of $1.3 trillion. Africa is growing, with some of its economies regarded amongst the fastest growing in the world. According to Cruikshanks, chief strategist at Investment Solutions, many multinationals looking to benefit from this emerging market growth struggle with the lack of knowledge of local markets and consumers.
Firstly, it's from an exposure point of view, one can't just transplant marketing campaigns from Europe or Asia straight into Africa. One has to actually formulate it for the African market, specific to the countries that they're in. They can't just come in and not worry about that. The cultural side needs to be taken into account. And I think the other mistake people make is to actually underestimate the size of the market.
One of the most common misconceptions that we've witnessed is the interpretation that less sophisticated means cheap. And it doesn't necessarily mean that. A market can be not as sophisticated as most well-developed markets, but then when you look at the cost of doing business, it's quite high, and that has an influence on the price you pay for goods and services.
Despite Africa's attractiveness, the high cost of doing business, corruption and dictatorships could scare off potential investors. Another barrier to succeeding on the continent is trust. Critical in African consumers' eyes, multinationals often underestimate their intended target market.
To assume it's not a sophisticated market, I think it is a sophisticated market, and it requires its own market research to understand the market, to understand the breadth, depth, etc., and also the aspirations of the market. It's also not a single continent either. There's very different regional cultural nuances that need to be taken into account in the marketing space.
The future of marketing on the continent is promising, and as more investments come in or get generated within the continent, the more the market size will grow. Pelani Nyalunga, CNBC Africa, Johannesburg.
Well, joining me in studio to discuss the opportunities and pitfalls of marketing and advertising on the continent, Doug De Villiers, Group CEO for Interbrand Sampson. Next to him, Marc Spries, Business Unit Director at Ogilvy Africa, and also on the desk sitting right next to me, Cruikshanks, Director for African Operations at TBWA Lascaris. Welcome to you, gentlemen. It's great to have this discussion. Graham, I'll start off with you. You've spent a lot of time working on the continent, in terms of working with specific brands, understanding the advertising industry as it evolves on the African continent. Where is it in the growth phase right now? Where's advertising in the growth phase?
I think it's in quite an early stage, but it's growing very, very quickly. Mm-hmm. It's a very exciting time, I think, to be involved in advertising and communication on the continent, and I think it's really just it's going to really take off in far more significant nature than it has been.
And in terms of the key players right now, is it dominated by groups like yourself, South African advertisers? I mean, who are the key players involved in the advertising world in Africa?
I think you see a lot of the big global networks expanding very quickly into Africa. Some have been there a long time and have worked their way. TBWA has been there for the last 13 years, so we're perhaps slightly later to the party, but you do see most of the big global networks represented.
And Doug, when we're talking about, Mark, when we're talking about Ogilvy and Ogilvy's presence in Africa right now, how does Africa strategically fit into the C-suite mindset around growth opportunities across the world?
Well, I think like all multinationals, I think everybody's looked at the continent and said there's going to be enormous growth. I mean, you know, you've just got to listen to any news report and you hear about oil and petroleum and minerals and mining and you know, manufacturing. It's growing. So as our clients move into those markets, so the agencies are being forced to move in. And I guess that's to your point a little earlier on, is that we're being forced to open up offices in some territories which, you know, historically you might have looked and said, well, we don't really want to be in the DRC because there's not much for us. But you know what, we have a client there and the client says, we're there, you need to be there.
How do you deal with getting staff there and skills there? I mean, can you find skills on the ground, or does it take a lot of kind of convincing for local staff?
I think that's every agency's headache. You know, we certainly have the skills globally, we have the resources globally, but we don't necessarily always have the skills in market. So we spend a lot of time going in, looking for the right people, trying to set up those offices, you know, as optimally as we can so that we can get the best out of the office, but leveraging off.
Do you have to put money on the table?
So we have to put money on the table, and I think that a lot of the agencies there have been burnt, you know, historically with fly-by-nights, people coming in hoping to make a quick buck and leave, and you know, it hasn't worked out. So they're a little more robust now when they're doing business with agencies going in.
Yeah, I mean, I think we found that our model has been more about finding good affiliate partners, so we don't have equity in the companies that we work with. We found that as an easier way to start to do business, because we have also you know, experienced issues with guys that are potentially just not quite, you know, they're slightly misrepresenting what their capabilities are, and you get into situations where you bring your global clients into a particular relationship, and the guys that you've partnered with aren't necessarily doing all that they say they can do. And
in that case, easier to walk away from a relationship if there's no equity already.
Yes, although you don't want to be in that position clearly. So you know, the point is you've got to be really diligent about doing the background work, doing the capability assessment on with these agencies, so that you do create strong partnerships.
So Doug, let's talk about branding in Africa right now. I mean, your thoughts on how companies, multinational companies, are approaching branding their African products and services?
Well, I think as we discussed...
And of course that's a very broad question, I know.
It's a huge one.
You know, what stands out?
Well, I mean, the first thing is that, you know, a lot of new entrants into Africa, and I say new entrants, guys that are, or companies that are coming onto the continent in a meaningful way, as opposed to just having agencies in the client space, if you like. The ignorance of the continent, there's an element of fear, and the two are obviously quite closely linked. So we're seeing, as was quite correctly said just now, all the internationals are pouring in. Sometimes they're choosing soft landings. Kenya, of course, is an example. South Africa, to an extent, an example. Whereas a lot of the markets where the real business sits, the likes of Nigeria, the likes of Cameroon, even up to Egypt, where Ethiopia, where there are just big consumer numbers, these are the ones that most of the internationals are quite scared of and are choosing slightly softer landings coming in. But these companies are coming in. There is a lack in many areas of decent market understanding and market knowledge. There are certainly some cultural gaps and understanding of culture. But there's tremendous opportunity. It's the companies that understand they've got to come in for the long haul, that this is not something you can just step into and step out of, that are making a success of it.
In that context, let's talk about localization of brands and of messaging from an advertising perspective. Firstly, from your side, what do your clients want to do? What's ideal for them?
Well, ideally they want to get a product or a service into the market that resonates, that is appropriate to the market itself. I mean, the whole idea about having authentic products in these markets is, of course, the departure point. If the market doesn't regard your offering as authentic, it's going to reject it. So the ability of some companies to transplant, if you like, a multinational brand like Coca-Cola into the markets actually works quite well, because the positioning remains authentic and relevant enough to pretty much cover every market. But there are many others that make the mistake of trying to bring in unnatural fits. So understanding the kind of offering that your product brings to the market, how you position it, how your product talks, very, very different to every single country, not just Africa as a whole. One of the big mistakes is trying to also treat Africa as one homogenous, you know, sameness. It's very much not.
How do you go about that, debate versus localization versus keeping the same field brand of the brand and the same messaging and just transplanting that into the various markets? I mean, what is your approach to dealing with that?
I think that, every market in the world has gone through that. As globalization has expanded, where Coca-Cola has learned to say, well, we need to talk in a specific way in the South Americas, for argument's sake. And so they had to adapt what was essentially a global strategy. So you have global brands which are looking and saying, but these are the truths of the brand, and how do we take that, which is in essence our differentiators, and leverage those points within a particular market context. So, East Africa, for argument's sake, might be more Muslim or Indian dominated, and therefore the language might be slightly different to a West Africa, which has French and I guess other parts which is Portuguese, and it's a very different
Portuguese.
This is
not a new concept then to advertisers, to basically localize the marketing message.
Yeah, and I think what's, as I said, is it's about finding that balance between, because no brand wants to change their global strategy. It's important, it's inherent in the brands, but you have to find a way in which that global strategy works at a local level, and that's the bit where creating partnerships with local people, local agencies is going to give you that edge. You're going to get that insight, and then work out a way in which to marry the bigger global piece, and then obviously the local insight, the local relevance.
Yeah, I was recently in Tanzania, and Vodacom was everywhere. Interesting, because MTN, of course, the dominant African player, but the messaging was all in the local language. It all had a local flair. It had images of people who were local, so very much localized to Tanzanians.
Sure, but yet if you look at it, and you look at it very carefully, you will see that they haven't really moved away from the CI. It is all still red, it is still the same font, it is still the same look and feel essentially. So it's still talking Vodacom or Vodafone.
Yeah, you've recently been involved in Standard Bank's African rebranding, if you could call it that, or African messaging. Tell us about the thought process around that strategy.
Well, we spend a lot of time working together with our African counterparts to establish the Moving Forward platform, and that was a sort of a key success story for us in terms of taking a global insight about progress, and then finding ways in which we can make that relevant to the local markets. And we spent a lot of time bringing the insights to our sort of creative process through our contacts, through our network, our African agency network.
So tell us about the actual message that you were able to come up with, given, of course, you've got this Pan-African brand, essentially.
Yeah. Well, I think the broader context of moving forward and progress, as I said, is a very much a universal insight, and no more prevalent than on the continent, where guys are looking for advancement in any shape and form that they can find it. But one of the things that we needed to make ourselves sort of relevant to the African continent is talk about our African heritage. So the campaign, which was about they call it Africa, we call it home, was our way in which we could embed Standard Bank as a truly African bank,
and attach, of course, the name to Africa. Let's talk about distribution channels and the various media options right now. What is the thinking in terms of the most effective for clients that you work with?
Well, I think one of the points that came up early on as well is we tend to look at everything also through a communication lens. A lot of the differentiation that we find globally, but also in Africa, goes right down to the product as well. So if you look at something like a Samsung, they make a product that has a power facility to deal with surges in West Africa. So ensuring that the product that is offered to the market, the manner that it's taken to market, the communication as well as the distribution channels are appropriate to each of those markets, that's becoming a big differentiator. It's no longer just a shouting competition. And I think we'll see more and more that we all look for proof points. So if you're going to go and advertise be it a financial institution or a consumer product, ultimately the customer is going to have an interaction with it in one form or another. That then becomes the decision-making criteria.
Can I amplify something there, and I'll tell you why. Because Samsung, if you take Samsung as a model, they've really taken the high ground and have said, we're going to do what I guess Panasonic did here 10 years ago. And that was go into the markets and try to own every category that you can. So, when you go into the markets, they are uber dominant.
But they're
So-
relevant, which is the
Absolutely.
beauty of a Samsung.
Absolutely.
They understood their market, they've gone in and they've made those little adjustments in those markets that translate in every single touch point, from the product to how it's presented in retail, to how it's communicated, and then of course how the rest of the market talks about it. And that's how you build the entire
We've got to
range.
take a short break, but do you want to add to this comment?
I was just going to say, I mean, Guinness is a good example
Yeah.
and something I've had experience with, which has created an Africa a product that is more specifically more relevant to the African continent. It's been there for a long time. It's a vastly different product than you see internationally. But it's another great example of a brand that's managed to weave itself into the local popular culture. And it's not considered an Irish brand in these markets. It's considered a local brand.
One of Diageo's
Well,
biggest
an
success
international-
stories.
yeah,
Yeah,
an
certainly
international brand,
Nigerian.
but with huge local relevance.
Yeah.
Yeah.